know if you know this, but since 1975, financial institutions, that's me and you, have been required by the Home Mortgage Disclosure Act, that's HMDA, to gather and disclose specific loan level data regarding mortgage applications and originations. Like, what is your ethnicity? Now, did you know that? Then, in 2011, HMDA, the administration was turned over to the CFPB. Now, why do I bring this up? Because the CFPB is examining trends in mortgage applications and originations. That would be ethnicities. So why are they doing this? Well, because in 2023, a greater portion of borrowers reported having paid discount points than in any previous year since data tracking started, and the median overall loan payment, it also increased dramatically. You see what's going on here, don't you? You're charging more points, and your payments are going up, so the CFPB wants to see if you and your company are price gouging. And if you are, who are you gouging? Here's the deal. With volume being as low as it is, it stands to reason that mortgage banking operations, non-banks, would pad profits on their daily rate sheets. Less volume means I need more per. Did you know that discount points were paid by more than half of the borrowers in 2023, nearly a 13% rise over 2022? Over 56% of single-family loan originations paid some discount points in 2023. The median discount points paid were approximately $3,900 for refinance loans and $3,000 for home purchase loans. That's going to get your attention now, isn't it? That's what your company is doing. But from a loan officer's perspective, it's also a great time to charge more from an originator's perspective, as if you could actually do that. And of course, to check to see if your HMDA data is copacetic, meaning the CFPB wants to check and see if you're charging more for minority borrowers and underserved community loans. That's what they're looking for, and that's why. Never mind that rates and home values have continued to both go up, which would lead to the exact same result. Now, as crazy as this is, don't say I didn't tell you, because it's happening. Further from the CFPB report from which this information comes, and further cementing my point, overall costs of loans went up, but the hikes for Black and Hispanic borrowers were greater. In 2023, the median total cost for refinancing loans was over $7,300, while the median total cost for home purchase loans was $6,700. That would be for Black and Hispanic borrowers, so the median total loan costs for house purchase loans increased more quickly for Black and Hispanic borrowers than for Asian and non-Hispanic white borrowers. That's their motivation, guys. Moving on, the share of originations from non-depository institutions keeps rising. Independent mortgage businesses and other non-depository entities created a lot more loans than banks and credit unions. Nearly 62% of all closed in-house purchase loans and more than 64% of refinance loans were originated by independent mortgage companies in 2023. So that's the motivation, and there is your target. It's you! I gotta tell you, this feels a little bit like a witch hunt to me. What I want to know is this. If we want to ensure that those from different backgrounds have the same outcome on their mortgages, then how on earth does Fannie Mae, Freddie Mac, and the FHFA rationalize loan level price adjustments? I've kicked this dead horse a lot. I keep asking these questions. Those loan level price adjustments are put in place and mandated by the federal government, who owns and runs Fannie and Freddie at this point while they're in conservatorship, requiring different outcomes that are punitively higher for those with loan-to-value issues and lower credit scores. And also, since the Federal Census Bureau keeps records of credit reports per ethnicity and saving patterns per ethnicity, I know that the government knows that loan-level price adjustments are going to have a disparate outcome. And that means disparate impact, and that means that the federal government, for which the CFPB is a part of, is guilty of its own HMDA violations. Yet they mandate this discrepancy for me and you, but they enforce it differently and punitively again for us. It's a contradictive point that I brought up many times before. If the federal government wants discrepancies out of the mortgage industry, the first thing they need to do is get rid of loan level price adjustments. Yet we're going to continue going down the road and brushing off this dusty narrative that lenders are violating these rules. I say, why don't they look at themselves? Now, please tell me where I'm wrong. I hope this helps. Hey, listen, guys, Carl White is opening up his own mortgage company's office for a Mastermind event up in Michigan, and it's on March 20th and 21st. Listen, if you're in the area or feel so inclined to go, man, check it out. I got to tell you, I have a soft spot in my heart for Michigan. It is a great place, and Carl's going to be there, Can't miss this one. Fill out the information down below.